Greetings, members, one and all of the Salivation Nation. Gold and silver lose altitude because of these two factors. Let's explore. You guys know I like to kind of talk a little bit about the movement of the prices of gold and silver, even if it's intraday trading. And this article comes to us from Reuters through the conduit of CNBC. Before we get there, I want to encourage you to engage with the channel. No, I don't want you to propose to marry me. Just gently take your pinky, not your thumb, not your forefinger. I want you to use your pinky and gently caress that thumbs up button. That would be a great help. Indeed, and maybe even share the video with all of your friends and colleagues. But nonetheless, this is the market. We like to talk about the markets and see what happens, but the fundamentals don't change. There may be day-to-day movements in price, and that's part of what this channel covers, but we know the fundamentals don't change. And we have seen some pretty crazy volatility as of late, and more than likely that volatility will continue and be pretty much unable to really predict what's going to happen in the markets. Although I do stand by my initial predictions by the end of the year that we will see a gold touch $2,000 and silver between $30 and $35. But I could be wrong. But I think we may see that happen at least for a time, for a period before the end of the year. But nonetheless, this comes to us from, like I said, from Reuters, and gold rose on Tuesday. We saw it bounce up to well above $1,800 at one point, bolstered by a retreat in U.S. bond yields, while investors watched for minutes from the Federal Reserve's last policy meeting to gauge interest rate trajectory. Those meeting notes, I don't think have been released yet. And we're going to take a look at the prices here momentarily. But benchmark U.S. Treasury yields hit a 2-year weak trough, boosting gold's allure as it tends to lower gold's opportunity cost. What we've seen in the last few days is central banks are dismissing the idea of raising interest rates prematurely, said Fawed Razadzada, analyst with Think Markets. Investors are realizing that monetary policy will remain historically very loose, and that's one of the reasons why we're seeing bond yields go down, which is helping stabilize gold prices after falling sharply in June. And this is the doldrums of summer, so it's amazing to kind of see gold and silver kind of pick up a little bit here, right in the midst of this. But nonetheless, that's part of the unpredictability of the market. Focus is on minutes from the Fed's latest meeting, due out on Wednesday, after a hawkish tilt from the U.S. Central Bank last month, in which policymakers projected to start to rate hikes in 2023, prompted gold to retreat below $1,800. And of all my time here, kind of keeping up with the markets, I'd be hard-pressed to think of another time where people were so anxiously awaiting the minutes from a meeting that they've already given statements about. And just goes to show you how Fed kind of talks out of both sides of its mouth at times, and so there could be some warning from those meeting notes that may send messages one way or the other. Gold regained some footing after data on Friday showed the U.S. unemployment rate ticked higher. We believe there is still metal in the precious metals. In other words, meddling going on. Well, we know there's metal in the metals with one T, as inflation should prove transitory, which implies that market pricing for Fed policy is too hawkish, TD Securities said in a note. With gold already managing to hold onto its uptrend, the scenario which would ultimately catalyze a return of institutional interest, which could see prices firm north of $1,900 an ounce. And I believe we could possibly see that $2,000 level. But as time goes on, that becomes less and less likely, just as time goes on, where we see silver down, well below $27 an ounce. That may be less and less likely too. But this article was originally kind of written earlier in the day, but we have this article from Kitco that talks about how, just as they've gone up so quickly here, they lost a little altitude as key outside markets see sharp reversals. And indeed, we did see that today. Gold prices are higher, but well down from daily highs, from Jim Wyckoff here from Kidco News, while silver prices are solidly lower in midday U.S. trading Tuesday. Early today, the two metals hit near 3-week highs, and what were at the time bullish outside markets, as crude oil prices were sharply up. It hit a 6.5-year high, and the U.S. dollar index was weaker. However, around midday, those two markets sharply reversed, and those are the two factors. And I tell you what, the dollar index is number one on my list as to what affects the prices for gold and silver, and then crude oil certainly does play an important role. And they reverse course to see crude oil prices trade solidly lower, and the U.S. dollar index pushed to decent gains on the day. That sent gold and silver bulls running for cover. But gold didn't lose all of its altitude. We'll look at those prices here momentarily. The gold bulls were able to hold more moderate gains. However, August gold futures were last up $10, and silver was last down about 32 cents. Global stock markets were mixed to flat overnight. The U.S. stock indexes are lower at midday in profit taking after the S&P and Nasdaq poked to new record highs early on, but now they're down now as well, following a 3-day U.S. holiday weekend. Summertime low volatility trading doldrums may resume this week amid notions that major central banks of the world may have to keep their money policies easier for longer following recent economic data that was not deemed robust enough to start to pull back the reins on the very accommodative money policies. Traders are looking ahead to Wednesday afternoon's release of the minutes of the June FOMC meeting. If you heard that hiccup, type the word hiccup in the comment section below. If you didn't hear it, just ignore that previous statement. Australia's central bank left its monetary policy unchanged at its meeting Tuesday and indicated it won't raise interest rates before 2024. There, Australia is even more low-key with it. The key outside markets at midday today see the U.S. dollar index higher and near the daily high. So, yeah, that was at midday. So there you go. Pretty interesting indeed to see where these markets go and how they can literally turn on a dime. So let's see. Looking at all the metals today, we have red, all of them save for gold. Gold was up, but only up $4.80. Silver trading down fairly sharply, down 35 cents, $26.22. But that is something to take into consideration here, is that this volatility of silver, we're starting to kind of see it rear its ugly head again. Platinum down $3, palladium down. All the platinum group metals are down. Palladium is down $30, $29. Really, the only other metal that took the biggest hit really now is rhodium, down $400, down 2.3%. Yeah, it's $10,000 below its all-time high. Yes, I know I should have sold then, but hey, that's okay. I'm keeping that bar, the rhodium bar that I do have, for reasons that I've discussed before. But nonetheless, where does that leave the gold to silver ratio? Well, back up again to a frustrating 68.78. It was down to 67 just days ago. And so that is frustrating to many of us silver stackers out there, because we'd like to see that ratio get into much closer to normal territory. Although this is definitely a pleasant number compared to what we have been seeing. 70 to 80 to 1 is kind of where we were at before, and it did reach as high as 126, I think, to 1 at the height of the big panic, I guess, in March of 2020. Very, very interesting numbers to look at here. But nonetheless, we know that silver tends to trade just as much as a commodity as it does as a currency, or as a hedge, as a monetary metal, not as a currency. Silver hasn't been used as a currency for most nations since the late 60s. So there you have it. There is your precious metals news. But what does this mean for all of us? Even though we're seeing some of these prices kind of moved back and in the doldrums to a point. Gold stackers should be happy to see these prices stay kind of where they're at and up for the most part. It wasn't $1,900 was not that far away, and still not that far away in terms of percentage wise. Silver, where it is, it's a bit frustrating for silver stackers. Hold on. I would encourage you to hold on to your silver for sure. Don't be discouraged by this. This too shall pass, and we will see the prices reflect in due course. And keep in mind too that it was this time last year when it was a crazy miracle that it hit $25 an ounce after what happened in March. So it is still above kind of where that level is, what we saw, $25, and hanging on. We'll see it continue, I believe, and we're going to see this new floor, and there's a new resistance level, I think, for silver that we've not seen for quite some time, and that is cause to celebrate in my view. Let me know what your thoughts are on the markets. I would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.